Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, everyone's bullish on an election year, which is coming up in 2024. However, this may not go as people think. We got some very important data to show you guys, so let's dive in.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey guys, sorry about yesterday. Had some technical difficulties, but we're back today. And so we're going to talk about the 2024 cycle. Many people are under the impression that election years are bullish. A lot of times they are. If you keep in mind, the last couple of recessions have actually coincided with election years. And the most recent one, the Great Financial Crisis, was a gigantic mess into that election. So are we headed for the same scenario, Bob, or can we rest easy?
Yeah, I mean, we've been actually flip-flopping back and forth because we'd have a one-term president, then a two-term president, and a one-term president, a two-term president, and Biden might be a one-term president just because the nature of the economic activity. But, what we really want to show you guys is the natural assumption is that if we do have a green 2024 because they're opening up the sluice gates, is most people will automatically assume is what got us there is going to continue. And we have 30 years of data to tell you that's absolutely not true. And the interesting thing about, in our point of view, just so you can back up here, is that our viewpoint is that the market generally will drift higher to the end of the year this year. It may start from a lower base here too, because we've had 8 straight days up in a row, but we can't get over this resistance area that we have. But we may get a blowout in volatility in January, and then we may have, I think, a pretty good opportunity for some sort of volatility event, March into summer. We talked about that too. And what may cause that, or might be a result of that, is that basically a shift around, if we want to throw this chart up, of how the different sectors are going to react against the S&P 500. That's kind of like the constant. So we don't know if the market's going to be up or down, but we have data that tells us what's going to outperform or underperform. And there's a lot of people right now that are in tech, and we're tech heavy. Tech is the number one overweight in all the indexes. In fact, I think it's at record highs right now. Phil, correct me if I'm wrong.
Yeah.
And so as that underperforms, that's going to drive the SPY down, the SPX down with it. And we're definitely in a recession now. All the data is saying it is a recession. In fact, this whole week we've been getting actually the recession trade here. The fact that SPY is up, Phil, is meaningless unless you understand what's down. Energy's been sold, bond yields are coming down, people are positioning for a slowing economy. And even if the Fed then reacts to that, if you notice what goes up, bonds go up, energy goes up, but tech goes down in this environment. And really what this is showing us is that over 30 years of data tells us that the market leans more towards a recession trade than they're going to pump the market for the incumbent to get reelected.
Yeah, and I think too, you have to take a look at this chart and look at what performs in this situation, because I think all roads lead to a recession. I think a lot of people that you talk to, at least that I talk to, definitely are starting to see it. And, some of the things that have been the most resilient, like construction, and I have friends in construction all over the place, up here, Hawaii, and Hawaii's still doing okay, but like in the mainland, continental United States, I'm hearing about all kinds of slowdowns. And I'm talking like areas that were extremely busy. I mean, they can't even remember the last time that they were slow. And now they're starting to see like nothing coming in as far as getting requests for bids and things like that. So for the first time, I'm finally hearing it. I've been warning them, but they haven't been seeing it. Now they're finally starting to see it. So how much can Yellen defer this, right? I mean, she can play some games. She does control the lever on the long end of the bonds. And all of a sudden, we're very sensitive to what she does with that debt. debt issuance, but I think you can only put that off for so long. You can only hug the T-bill side of the spectrum for so long, and then you're going to create a bigger problem. They know that. I think they're just trying to push this out, and it's a little bit of a chess game because there's a lag in what she's doing in terms of how much she can defer that. They might screw up. They might defer it right before the election cycle, and then we start going into a full-fledged recession like 3 months prior to the election, right? So I think they're playing a dangerous game. I think they're trying to at least get it to a situation that they feel like they can pump the market, and there typically is a bit of a pump going into that November. Maybe it starts in October. So I think you have to be realistic about it. But big picture, I think they're playing with fire, and I think that they might meet the destination they were trying to avoid, taking the road they thought they were going to avoid it on. So I think that's where we're at on that, and I think they're going to fail. I think that you can't overcome the market forces, and we've seen that in 2000. We've seen it in 08, and those years did not end well, and those were election years. So I think we have definitely a potential for that, just given all the data. Look, cardboard's down, trucking's down, Maersk, huge, that's your global shippers down. All we need now is just the rails to tell us that their traffic has been dropping like crazy. You know, Disney parks, especially in Florida, unseasonably slow. And I think these are all key indicators that retail's tapped out. The economy on the whole, I think, is tapping out. And I think what really is going to set this off, Bob, and where you're going to want to go back to this chart and start looking at energy and staples and utilities as more, if you got to be invested in the market, those are going to be the sectors. And I think Amazon's going to be the tell. When Amazon starts missing, because that's it, right? They are the economy when it comes to retail, just like all these Mag 7s are the economy when it comes to electronics and are the economy when it comes to computing. That's why there's a Mag 7, because they are the economy now. It's gotten really concentrated. But that being said, a really healthy economy should not see such a disparity in the breadth of the market. And that's where we're at now. It's because they're the last, cities of refuge in the market. So yeah. I think it's a good point. I think this is a good setup. I think this is your menu for what's going to perform the best or suffer the least. All of it's going to get hit. We were looking at gold today, Bob, in the room, crypto room, and it was like, well, gold performs pretty well, as does energy in a recession. Yes, but they still go down. If you looked at 08, gold had a 30% reduction. Now, this is in the ETF era of gold. So gold 4 years prior had an ETF approval, was humming along. But when 08 came around, most of 08 was down for gold. Now, it bottomed at the end of 08 because those things tend to bottom first. They're like your leading indicator. So you can't escape it, but you can outperform the market. So if you got to be vested in the market, I think this is a great menu for what you should be focused on.
Yeah, this is a Republican Congress trade. So, the House of Representatives is not going to give the Biden administration a free gift into the election. That's why you see utilities up, because I think yields are going to be falling. Staples are up because people aren't going to buy what they need. Energy is going to be up because the geopolitical environment, plus it generates consistent cash flow that pay dividends. And remember, these dividend paying stocks are going to move up if bond yields fall because they're relatively more valuable. And people forget that. They've been suffering this year because the whole interest curve has been pushing higher. Why should I take a risk on ExxonMobil at 4.3 dividend when I can get 5.3 in 90-day money? And ExxonMobil is the gold standard, if you will, of if you need to own a company, you're owning a company that's generating consistent returns over decades and has visibility into the future. So when yields start to fall, ExxonMobil becomes just relatively more valuable, and all the energy names, all the big names, they all pay dividends. So, and look at the blowouts we've been having, and shipping is getting destroyed except the shippers that are shipping energy. So there's going to be tremendous opportunities in this, but this is definitely a recession trade. This is Republican trade, and that's set up for 2024, and we have no idea what blowups are in front of us. So, there's the market's priced for perfection. And even this week, we have 8 days in a row, Phil, and the breath is horrible. If you're going into a new bull market, sectors, I think 6 out of 10, 60% of the sectors were down. That's not a bull market. That's a squeeze.
Remember yesterday we were looking at the net new highs, and it actually had a negative print on the, the 7th day up in a row, and we have a negative print on net. That tells you how bad the breadth is. So it's not something that you see in a market that's rebounding. And the other bounces we've seen of this size, 5% or whatever, have had much better participation. So Yeah, we're not out of the woods. And keep in mind, this chart too is excess returns. So the market's negative. It just means they're less negative. So you still want to be, I still think, your best bet is going to be like things like TLT ultimately. That's why I say you got to really watch TLT versus SPX right now. Watch for that divergence. We were almost looked like we might be starting something today. And then it kind of, after the bond auction, it kind of went away. But I'm keeping an eye on that. You got to see something like after a week, after 2 weeks where it's consistent. Then I think the nail is in the coffin and the market is now basically in the recession trade at that point.
Yeah, and no matter what we talk about tomorrow, I'm going to throw that TLT chart up that I shared with everybody this morning. It's at a really interesting inflection point where it can really run like a rabbit or it does its final pullback. But we'll show you what we're looking at here. And we'll also show you the indicator that we use. Just makes these trades no-brainers. It's just a nice indicator. And you guys can have it if you join us. So with that, Phil, we're done rambling for the day. Market's interesting. Hit like, hit subscribe. We'll definitely want to talk about how crypto reacts to the bond market, Phil. That's really fascinating. And so maybe we'll do a potpourri unless something really interesting happens tomorrow in the markets. But there are a lot of edges and there's a lot of alpha out there for you if you just study these correlations and take advantage of them. But with that, Phil, thank you so much. Everybody else, guys, have a good one.
Trade Genius.